Welcome to another edition of HOA Today. I'm Mark Foster, and this is the HOA Leadership Network. Well, if you're an HOA leader or an HOA resident and you've been around for the past 5 years in an HOA, it's no surprise to you that one of the major factors in your HOA fee going up has been the cost of insurance, which has been spiking across the country due primarily to hail damage, storm damage here in Minnesota, other states like Texas, Florida, and more recently, California. And now comes word that homeowners outside of HOAs are experiencing a very similar pain as insurance rates start to skyrocket. We're going to try to unpack all of this with Eric Skarnes. He is the president of Insurance Warehouse, a frequent visitor and speaker to the HOA Leadership Network. Eric, thanks for joining today.
Yeah, thanks for having me, Mark.
So there is a lot of news lately about home insurance rates spiking among people across the board, not necessarily just in HOAs, but really everywhere. What's accounting for all this, Eric?
Yeah, everyone in the HOAs can pass the news along to their friends in the single family community because they've been used to it for the last few years. But hail has not been specific to townhome associations. It's hit every type of home in Minnesota. And so the single family market is starting to feel the effects that we've seen on the HOA side. And so as the HOA side has become extremely difficult, now the single family side is feeling the same thing. So we've seen rate increases, deductible increases, reduction in coverage. And a lot of carriers simply just aren't interested in writing business in Minnesota currently. So we see a lot of people talking about their increases on their single family side, 20, 30, 40, 50% rate increases. And then they go to shop it and they can't find anything better. So exactly what we've seen on the HOA side is hitting the single family side. And in Minnesota, it's all hail driven. It's been that way for the last 15 years. But every problem we seem to be having in Minnesota it all ties back to hail, unfortunately.
Yeah, so no roof is really safe when it comes to hail damage. So many HOAs have seen dramatic spikes, say over the past 4 or 5 years. I know where I live, we've seen about a 400% increase over about a 5-year period. So if you could compare the trend line in HOA insurance premiums in Minnesota, say over that 4 or 5-year timeline, where are we today? Is it starting to level off? I can't imagine it's decreasing, or is it continuing up that sort of hockey blade if everything's on a hockey stick?
Yeah, I think your HOA and many are in the same boat where if they look at their premiums for 4 or 5 years ago, they've seen significant increases, double, triple, quadruple. And that seems to be every association in Minnesota. I do optimistically think that we've sort of slowed down. I think we're continuing to see rate increases, but a handful of carriers we're seeing in the single digits, other in the 10 to 20%, which may not sound great to new board members, but to other board members that have been around for a few years and seen 50 or 100 or 200% rate increases, we'll gladly take these smaller increases. And I do think that we're starting to see maybe a plateau. I don't think it's declining anytime soon, but if we could at least plateau a little bit, I think we've hit hopefully the peak of how bad things can get from a rate standpoint in Minnesota at this point.
So there has been a lot of shifting of insurance providers of late. It seems like there's a lot of confusion among HOAs and property managers alike about who's in, who's out, who's providing insurance, who's not. So can you clarify the difference between what is termed as admitted versus non-admitted insurance carriers?
Yeah, I don't blame the boards or the property managers for having a hard time keeping up with things because this is all we do and we have a hard time keeping up with it. Carriers seem to be in and out and it changes on a daily basis. And so what we've seen in Minnesota recently is that we've seen a lot of non-admitted carriers become competitive in Minnesota. And so really at the beginning of 2025, I think kind of in line with the California wildfires, we saw a lot of carriers come into Minnesota from the non-admitted space and offer very competitive pricing where our standard carriers have continued to take large rate increases and are really not interested in new business. And so as we continue to quote out new associations or reshop renewals for the associations we currently are working with, a lot of them are getting non-admitted options, or non-admitted options are their only options, and there's no standard carriers that will even offer a quote for them. So it has become a popular topic or a point of debate recently as we continue to talk with property managers and board members alike.
So are you seeing that these non-admitted carriers are they more competitive sometimes? And if so, how are they allowed to operate that way?
Yeah, as far as from comparing a standard carrier and a non-standard carrier, a non-admitted carrier right now, they do seem to be more competitive, especially when taking on a new quote. So, we have American Family non-renewals, we have Country Financial non-renewals, a lot of Berkshire non-renewals that are coming through. We're seeing a lot of those associations go with non-admitted carriers just simply because the standard carriers are not interested in doing business in Minnesota, or the rates they're offering are so significantly high that the non-admitted markets are that much more competitive. Kind of to dive deeper into the non-admitted versus admitted, the admitted carriers are licensed to do business in Minnesota, and then they go through the admission process with the state. So they provide them their rates, their deductibles, their coverage terms, etc. The state approves them, and in order to get this admitted title, they go through all these hoops that the state has for them. And then they essentially get something similar to the FDIC, where you put your money in a bank. If the bank goes belly up, your money is guaranteed up to a certain level. That's the idea of the admission process with the state of Minnesota, is that these carriers then get some backing from the state of Minnesota or the insurance fund that the state has put together. And so they charge a tax, and there's a tiny little bit of money that goes into this fund every time your policy renews. However, the policy for the insurance fund states that the max coverage they provide is $300,000 in coverage. But if your deductible is over 300,000, you're not eligible for this state fund. And so with most associations having a 5% wind/hail deductible, almost every association has more than a $300,000 deductible these days. So they're not actually eligible for the Minnesota State Insurance Fund. On the non-admitted side, these carriers are also licensed to do business in Minnesota. They just don't go through the admission process. So they aren't part of the fund. But because of that, they don't have to run any changes through the state of Minnesota, which can take a very long time. And so if they want to change rates or change deductibles or add coverage or reduce coverage, they don't have to run it by anyone. They can move on a dime. And if they want to be competitive, they can be competitive. And so I think that's why we've seen a lot of non-admitted carriers all of a sudden be competitive in Minnesota, is they've identified Minnesota as a place that they want to write business. And so they simply lowered their rates overnight and are starting to write a ton of business in Minnesota.
So it feels like this might be a good thing, this non-admitted carriers getting more and more traction. Do you see any sort of long-term ramifications for this, that more and more HOAs are pursuing this option?
Yeah, that's a good question. I actually think, I don't know if it'd be ramifications, but in a positive side, I think the non-admitted carriers make things better for the HOAs in the long run. So I think competition is the only thing that saves the HOA insurance market. And so as we see standard carriers not interested in writing business, just essentially trying to retain what they have, these non-admitted carriers coming in and pricing things slightly lower or offering better terms will force the standard carriers to become more competitive. And so if the standard carriers want to retain all the business that they've built over the last few years, they're going to have to offer similar terms, similar coverage, similar deductibles. And so I think these non-admitted carriers coming into Minnesota will help push the envelope to make sure that the standard carriers, if they want to continue to do business in Minnesota, have to be just as competitive or somewhat similar on pricing and terms. So I'm hoping it's a good thing for the entire industry and pushes other carriers to be more competitive.
All right. Well, we're talking with Eric Skarnes, president of Insurance Warehouse. We'll get back into more conversation about HOA insurance trends in a moment here on the HOA Leadership Network. If you're an HOA board member with a desire to stay on top of HOA issues, now's your chance to join the fastest growing education association in Minnesota, the HOA Leadership Network. Our mission is to support HOA leaders through education, collaboration, and research. There are 4 chapter locations in the metro area. Membership is free, and meetings are monthly. For the schedule near you and to join, visit HOALeadershipNetwork.com. Back again on HOA Today, talking with Eric Skarnes of Insurance Warehouse. So, Eric, it seems like the state of Minnesota has suddenly turned its sights on HOAs after years and years of nothing happening from the state capitol. All of a sudden, there's all kinds of legislation on top of HOAs that we've been tracking and we've been reporting. But it also looks like they may be looking our way when it comes to insurance issues. Is that correct?
Yeah, there's a work group that's been put together that has been discussing insurance. I think a lot has to do with just the volume of complaints that every representative has seen from any area of the Twin Cities. They're probably seeing it quite frequently, or a lot more frequently than they had in the past. And so there is a work group or a task force that is put together discussing the HOA insurance issues. However, after listening to a lot of the back and forth, I'm not sure that the work group is going to come in and save the day for associations. I think going back to the previous comment about non-admitted carriers making things more competitive, I do really believe that our only way to save the HOA industry in Minnesota and make the board members' life just a little bit easier, I think, is competition. I think that's the only thing that helps drive down premiums and make for better coverage terms from the carriers. Is the more competition we have, the carriers will have to be competitive in order to write business in Minnesota, or they'll just simply lose out. So I'm hoping that's where the industry is headed, is just more options and more competition.
Sure. Something else to watch at the state level. So many HOAs obviously seeing very dramatic increases in premiums. We've talked about, tripling, quadrupling of rates in some cases. So that's forcing a lot of financial decisions among HOA boards. At the network level, we're hearing members really in panic mode in some cases about how they're going to finance some of these changes and some of these premium increases. So what's your advice to HOAs who might be struggling with these gigantic spiking insurance premiums?
Yeah, budgeting has become very difficult, all thanks to the insurance industry recently. So we've had a lot of conversations with board members and property managers trying to guess what next year's insurance premium can be. And although we try our best, it's hard to guess what the industry is going to do. And so a lot of times the budget is not set up properly, and an insurance premium throws everything out of whack. Especially if there's been some changes, where if there's an open claim or some sort of issue that's popped up, the budget can be significantly different than what the insurance premium is. On the non-admitted side, just so everyone is aware, the non-admitted side of the insurance space requires payment in full for every policy, which is extremely difficult for almost every association to do. And so in order to not pay in full, associations have to take out a finance agreement, or what's essentially a short-term loan, in order to pay their premium in installments. And so something to be aware of when working with the non-admitted side is typically the policy is only as good as the agent that put it together, and the finance agreement is always an additional charge. And so something to make sure you ask and be aware of, because you may think the premium is going to be $150,000, and then at the end of the day, you're stuck signing another $5,000 finance agreement, which is an additional charge. And so as you're going through the insurance process, just making sure you're asking those questions, making sure that if there is a finance agreement that has to be put together in order to pay in installments, you're aware of it and factor that into your decision, that it is an additional cost in order to not have to pay all of that premium up front at one time.
Right, and for HOAs that have a property manager, I would think the property manager could maybe help review some of those policies and make sure that what the board is looking at either has or doesn't include that finance charge.
Yeah, the property managers have probably seen more of them than the board, obviously, but a lot of times it gets buried in, one of 30 pages that's getting signed. And so a lot of times boards can get caught off guard when they aren't aware that a finance agreement is required in order to pay things in installments.
So you don't have a crystal ball, I don't think, Eric, but you mentioned at the top that it looks like things might be at least getting a little bit more predictable. Do you see ever a time where we're going to get back to some sort of normal, where there aren't these spikes, or where we're not going to open up our bids and suddenly see this enormous spike in insurance premiums? Do you ever see that coming to a more predictable level?
Yeah, a crystal ball would be great, especially for those budgeting issues that we get asked about. So I am optimistic that we're hitting a good spot in Minnesota. Again, as we've seen carriers from the non-admitted side come in and be more competitive, I think we're trending in the right direction. However, one hailstorm this summer, a significant one in the Twin Cities, I think wipes out any momentum that we've had. Now, I do think that it would be a very different claim scenario for carriers because almost every carrier is at a 5% wind hail deductible these days. So I do think that carriers' exposure is significantly reduced compared to hailstorms from just 2 or 3 years ago. So a hailstorm, although it wouldn't be great, and it would be great to avoid it, I think this may be the year if we do have a hailstorm. It's kind of is the proof in the pudding. Can a carrier write HOAs in Minnesota with a 5% wind hail deductible and still be profitable? So although I'm strongly hoping against the hailstorm, if we do have one, it might help prove to carriers that a 5% deductible essentially has eliminated most of their exposure from hail, and that maybe they can sustain business in Minnesota even if a hailstorm does happen, which in turn I think would make things more competitive going forward. So again, let's hope for no hail this summer so carriers can keep writing business in Minnesota, be profitable, see new carriers come into the space. But if we do have one, hopefully it helps prove that 5% is a large enough deductible that carriers aren't significantly exposed. And maybe that will help them continue to write business and stay in the Minnesota marketplace so we can continue to see competitive rates.
Well, the days of thunderheads and thunderstorms are upon us, so we'll keep a watchful eye. And we echo what you say, Eric. Let's hope for a good, calm, wonderful, clear blue sky summer. Eric Skarnes, president of Insurance Warehouse. He will be with us throughout the month of May at all of our chapter locations. So, Eric, thanks for joining us today.
Yeah, Mark, thanks for having me, and thanks for everything that you and HOA leadership do for the community.
Our pleasure. And if you're not a member of our network, join today. Go to www.hoalnet.com and join the HOA Leadership Network. Membership is free. I'm Mark Foster on HOA Today. Thanks for joining.